500 years ago, the most powerful bank the world had ever seen collapsed, and it collapsed because of a single flaw hidden at its very core. The Medici Bank financed all of Europe, kings borrowed from it, popes banked with it, entire kingdoms owed it money. The family that ran it became, for a time, the wealthiest in the world, funding the artists of the Renaissance itself. But inside its vaults, for every 100 gold coins its customers had deposited, the bank kept only around 10. The rest had already been lent out, sent abroad, and put at risk. In this video, you will understand exactly how the richest family in history lost their bank, the precise mechanism of the collapse, and why every major bank in the world today is built on the same foundation. Because the very flaw that destroyed the Medici, money that is not actually in the vault, sits underneath the entire modern banking system. And once you see it clearly, one uncomfortable question follows. If the system broke back then, what is holding ours up now? Stay with me. To understand the fall, you first have to understand just how powerful the Medici truly were, because this was not some small local moneylender. This was the most important financial institution in Europe for most of the 15th century. The Medici Bank was founded in Florence in 1397 by a man named Giovanni di Medici, and the family did something that had never quite been done at this scale before. They built a banking network that stretched across the entire continent. Branches in Florence, Rome, Venice, Naples, Milan, Geneva, Lyon, Bruges, and London. A web of offices, all connected, all moving money across borders in an age when moving money was dangerous, slow, and difficult. They pioneered techniques that still underpin finance today. They mastered double entry bookkeeping, the accounting system still used by every company on earth. They developed the bill of exchange, a clever tool that let a merchant deposit money in one city and withdraw it in another, without ever physically moving a single gold coin across bandit-ridden roads. In effect, they built one of the first truly international financial systems. And the money that flowed through it made the family extraordinarily powerful. The Medici were not just bankers, they became the unofficial rulers of Florence. They produced popes. They married into royalty, they funded Botticelli, Leonardo da Vinci, and Michelangelo. The Renaissance itself, in many ways, was paid for by Medici banking profits. At their height, the family was almost certainly the richest in all of Europe. So, how does an institution this powerful, this sophisticated, this rich, end up completely destroyed? The answer lies in the thing we mentioned at the very start: the vault. Here is the secret at the heart of banking then and now. When you deposit money in a bank, the bank does not simply lock it away and keep it safe for you. It lends most of it out to someone else and earns interest on that loan. This is how banks make money, and it works perfectly, as long as one condition holds true. As long as everyone does not ask for their money back at the same time. The Medici Bank operated exactly this way. By some historical estimates, its reserves were less than 10% of the deposits it held. In other words, for every 10 florins someone had deposited, the bank might have only 1 florin actually sitting in the vault. The other 9 were out in the world, lent to merchants, to princes, to kings. This was tremendously profitable when those loans were repaid. But it meant the bank was, in a very real sense, always exposed. It never actually had enough money on hand to satisfy all its depositors at once. Almost no bank ever does. For decades, under careful management, this was not a problem. The founder Giovanni, and especially his son Cosimo de' Medici, were disciplined and cautious bankers. Cosimo understood the risks intimately. He kept a close eye on every branch. He knew which loans were safe and which were dangerous. Under his control, the bank grew enormous while staying, for the most part, stable. But here is where the story turns. Because a system that depends entirely on careful management has a fatal weakness. Eventually, the careful managers are replaced by careless ones. The trouble began with the loans the bank chose to make. The most dangerous customers in all of medieval finance were not ordinary merchants. They were sovereigns, kings, princes, and dukes. Lending to a king was tempting because kings borrowed enormous sums and paid enormous interest. But it carried a terrible risk. If a merchant refused to repay you, you could take him to court. If a king refused, there was almost nothing you could do. He was a law. He commanded the army. You simply lost your money. The founders of the bank knew this. Giovanni and Cosimo were deeply wary of lending too much to rulers. But as the generations passed, and as control slipped to less disciplined heirs, that hard-won caution was forgotten. The branch managers, chasing bigger and bigger profits, began pouring money into loans to sovereigns across Europe, and they gave these rulers the dangerous impression that the Medici Bank was a bottomless source of funds. The most catastrophic example came out of the Bruges branch, in what is now Belgium. Its manager, a man named Tommaso Portinari, made enormous, reckless loans to Charles the Bold, the Duke of Burgundy. Charles was fighting expensive wars and he needed cash. Portinari kept lending, and then in 1477, Charles the Bold was killed in battle, leaving his gigantic debts to the Medici completely unpaid. That single relationship inflicted devastating losses on the bank. And this was happening across the network. The London branch had already suffered massive losses lending to English kings during their dynastic wars. The pattern repeated everywhere. Money deposited by ordinary savers was being handed to rulers who had no intention or no ability to pay it back. Now think about what this means. Combined with that, 10% reserve. The 9 florins out of every 10 that were lent out were increasingly being lent to the worst possible borrowers. The bank's actual solid assets were quietly evaporating, replaced by debts owed by dead dukes and defeated kings. On paper, the ledgers might still look impressive. In reality, the vault was hollowing out. By the time control of the bank passed to Lorenzo de' Medici, known to history as Lorenzo the Magnificent, the situation was already deeply dangerous. And here lies one of the great ironies of the story. Lorenzo was a brilliant man, a gifted poet, a shrewd politician, the greatest art patron of his age, but he was not the careful banker his great-grandfather had been. His genius was for politics and culture, not for auditing loan books. Under his leadership, the bank's decline accelerated. Lorenzo, facing a bank that was running out of money, made a fateful choice. To prop up the failing institution and fund the lavish spending that kept the Medici powerful, he reportedly reached into money that was not his to take. Historians describe him drawing on public funds, the money of the Florentine state, to cover the gaps. The private bank and the public treasury began to blur together. The problem was no longer just being solved, it was being hidden. And this is the final stage of almost every great financial collapse. The gap between what the institution claims to have and what it actually has grows too large to close honestly. So instead of admitting it, those in charge conceal it, borrowing from one place to pay another, buying time, and praying that confidence holds long enough for something to turn around. For the Medici, nothing turned around. The bad loans stayed bad. The reserves kept shrinking. Branch after branch was quietly closed or sold off as the losses mounted. The Venice branch was liquidated. The Bruges branch collapsed. The mighty network that had taken a century to build was unraveling, office by office. The final blow was not purely financial, it was political, and it was swift. In 1494, King Charles VIII of France invaded Italy with an army of 25,000 men. Lorenzo had died 2 years earlier, and control had passed to his son, Piero de' Medici, a young man who possessed neither his father's political skill nor his ancestors' financial discipline. Faced with the French army, Piero panicked. He made humiliating concessions to the French king without consulting Florence's leaders. The people of Florence, already resentful, had had enough. They rose up, expelled the Medici from the city, and the bank, already rotting from within, collapsed completely. Its assets were seized, its doors closed. The greatest bank in the world was simply gone. So that is how it ended, not in a single dramatic explosion, but through a slow, quiet rot. Excessive lending, terrible loans to borrowers who could not pay, reserves that were always far too thin, and finally concealment as those in charge hid the growing hole instead of confronting it until an outside shock brought the whole structure down. Now here is why this 500-year-old story should matter to you today, because the core mechanism that destroyed the Medici is not a relic of history. It is the operating principle of the entire modern banking system. Every major bank in the world today does exactly what the Medici did. It is called fractional reserve banking, and the name says it all. Banks keep only a fraction of your deposits on hand. The rest, they lend out. When you see your balance in your banking app, that money is not sitting in a vault waiting for you. It has been lent to a home buyer, a business, a government. The bank is counting on the fact that you and everyone else will not all ask for your money at the same time. This is not a secret, and it is not a scandal. It is how banking works, and in normal times it functions well and helps the economy grow. But it means that every modern bank shares the exact same fundamental vulnerability as the Medici Bank. No bank on earth actually holds all the money it owes its depositors, not one. And when confidence in a bank cracks, when enough people begin to fear their money might not be there and rush to withdraw it all at once, the result is the same in 2026 as it was in 1494. The bank cannot pay. This is a bank run, and it is the exact same force that hollowed out the Medici, only faster now, because in the modern world, a panic can spread across the internet in hours. We have watched this happen in living memory. In 2008, the collapse of overextended banks nearly brought down the entire global economy. More recently, banks have failed in a matter of days when depositors, spooked by rumors, tried to pool their money all at once and found it simply was not there. The details change. The mechanism is identical to the one that destroyed Florence's greatest family. Too many risky loans, too little held in reserve, and a fragile foundation of confidence that, once broken, brings everything down. The Medici thought their bank was too powerful, too sophisticated, too rich to fail. They had the finest financial minds of their age, the most advanced accounting in the world, and a century of dominance behind them. And still, the simple arithmetic of money that was not in the vault caught up with them in the end. Which brings us back to that uncomfortable question from the beginning: if a fraud is fundamental, could destroy the most powerful bank in history, and if that very same flaw sits at the heart of every bank we use today, then the honest truth is that our entire financial system rests, as it always has, on a single fragile thing. Not gold, not the reserves, just the shared belief that the money will be there when we ask for it. The Medici ledgers looked solid right up until the moment everyone realized they were not. If you found this as fascinating as I did, subscribe, because history keeps repeating the same financial patterns, and understanding them is the first step to seeing the next one coming before everyone else does. And tell me what you think in the comments. Was the fall of the Medici a failure of a few careless heirs, or was it baked into the very design of banking from the very beginning, waiting 500 years to be repeated? The most thoughtful answer gets pinned.